Hey, Sci Nation, what's going on? Happy Saturday or Sunday. Really depends on where you are at in this world. Wanted to take some time, create this video for you. In the past, I used to do educational uh, tweets on the weekends. Now that I have the YouTube channel up, I will be utilizing this platform more. I can give you a lot more out of this than a single or two or three tweets. And I think it's easier to kind of see things on the screen and see things move in real time and whatnot. So we are going to do this as the first episode to the SADucology series. And what those series are going to be is really just provide you educational content, whether it's a certain techniques such as the EMA clouds or the strat or fair value gap, order blocks, etc., or maybe just talking about mindset and psychology and whatnot. It's really just a way to get you guys a little bit more in broader spectrum of what I'm seeing. Doesn't mean that it's good, doesn't mean that it's bad, but it's just something that I see myself, and hopefully, maybe it'll be something that can resonate with you or click with you and make you turn for the other side. Again, this is for educational purposes, not financial advice. So take it with a grain of salt, and hopefully, it will benefit you. With further ado, let's get into episode 1. So, what you see on the screen right now is the SPY chart on the 5 minutes. And this is as of April 28th. Just picked a random date and pick some of the tweets that I give you all every single day that you unlock my brains. I already marked off my charts. This day already played out. I'm not really planning to go over where you could have gone in and out and whatnot. The purpose of today's video is really to talk about the power of one and profit projection and what it really means, because I wanted to really focus on this mental aspect and let you all know and visualize how much you all can potentially make with very little money, very little risk, and very little mental stress. So, what you see right now is SPY on April 28th, 2023. You'll also see some tweets that I put out every single morning or the night before as part of the analytics and game plan. So the first tweet that I put out before market open was saying, look, we have a potential cup and handle pattern right here. And that's what this blue line, you can see, come down and go up, right? So this was right here, was right about here in the pre-market. You can see it coming down and coming back up, which is right about here. So we already had a potential idea that we might be going up, right? That's one of the things we're thinking about going up into the market. Another thing I put in here is, look, PCE data was neutral in my opinion. I said Amazon beat earnings. I said watch for the bulls to try to test that 413, 414 again. So this is the 412 area. 413 was right about here, and then 414 is up here. And I gave you what I marked off as my pivots. I said 412 to 412.5 would be your top side pivot. I always tell you all to mark off your charts with what I put out, just because I think it's very helpful to see it on the charts versus just having the back of your mind or just watch it with a naked chart. My personal take, my personal opinion, utilize what works for you. I also said intraday pivot was going to be 410.5 to 410.6 right here. I said downside pivot is going to be 409 to 409.4. Marked it off here, right? Still have a couple handle pattern. And I'm saying if it fails to break the top side pivot or it fails to get to 413, we can come back down to 405. But again, I was expecting a move up based on what I saw. So with that said, look, this was where this tweet came out, right around here, right? Right about 5, 6 a.m. in the morning. You can see that we bounced off this intraday pivot right here. And then we went to the upside as predicted, right? As what we thought were going to happen. We said, hey, bulls are going to attempt to push it. They pushed to, right here is 413. This is your 413 mark. I will mark that off. So that way you can see it. 413, 413, and let's mark off 414. So that we can see it. 414, 14. Now that we have, right? So we were expecting the bulls to make this push up, and they did, right? They pushed it up. They broke through the pivot. They came back down, and they, break out, right? The classic breakout, wait, pull back, retest, and see if it holds. And if it does, it shot back up. We hit 413. Look, we're here. Right? 5 minute hit 413. Stop, pull back, rocket back up. 414 on 5 minutes. Literally, you can see right here, stop right here, pull back, continued up, and then eventually came back down and then hit that pivot again and then bounced back up, and then never saw anything but the day of light and higher highs and higher lows, right? So anyway, look, again, this is not about how to play this particular day with the analysis that was provided. What I want you to focus on is really how much you could have made with very little money, and that's what people don't tend to really acknowledge or recognize. Um, and I apologize. Disregard what you see on the screen. We'll get back to that in a minute. What I really want you to focus on was this. So what you see on front of your screen right now is going to be the 413 0DT expirations on that day. Now, if we go back to the charts, you can see right here, right? So this is 945. We broke through. This is 950. We're consolidating. 955. We pulled back a little bit. 10 o'clock is when we rock it, right? So 10 o'clock is when, if you were waiting for the classic, breakout, pull back, retest, and go, then that's where you would have gotten in. So again, right? So if you can see on my screen, you can see right here is going to be the 945, 950, the breakout pullback, and then right here's 955 pullback, 10 o'clock. That's when we held and we rock it up. So let's just say you would have waited for then, right? You've gone in, you can see this contract is 62 cents, right? You could have gone out at that first candle, a 5-minute candle, and pulled back, right? And then that would have been 89 cents. So that would have been a 27-cent gain per contract, right? $27. So you spent $62 and you made $27, right? That's not bad at all, right? That's a third of 33, 30 to 33% of a contract, right? Let's say you didn't get in then, right? You could have gone to the next one, 89 cents. And then you could have taken profit. At that point, you would have just kept holding because it was riding. It was hot. It was a massive 5-minute candle, right? And you probably would have not gotten out to maybe right about here. So let's just do this. So that contract was worth $1.50. So you got in at, let's just say 90 cents for easy mental math, and you got out for $1.50, right? 60 cents gain. So you almost made, 70% on that. But you could have held, right? There's really no reason why you wouldn't. If you would have gotten here, your stop would have been somewhere, at low of day or entry, break even. And then you kept riding it and it kept going up. And at the peak, let's say you got at the peak, right? The peak would have been 270 that you can see over here. Or you would have waited for that, like next candle and like, oh, it's starting to pull back. You probably would have gotten out somewhere here, right? Either at 270 or 177. So you would have made from 90 cents to $1.70. All, pretty much almost 100%, right? 90, 92, 93% if you would have gotten in at the 89 dollar mark, or if you got in at that original break, pull back and wait for confirmation break. Well, now if you would have got out the top, $62 to $227, right? So that's almost 4x. It's 3.5x. Or if you would have gotten out at this 1.77, that would pretty much 3x, right? A little bit shy, 280 something percent. Or if you would have got out at this, this after you got in, you wait for, because you would have set your stop here, and then it kept going, and then you would eventually move your stop to 89 cents. And let's just say it came up here, you see the pullback, and you would have got out $1.50, right? You would have took 62 cents and, made a $1.50, which was, over 100%. It would have gotten you, roughly, 130, 140%, somewhere around there. But you see where I'm going with this, right? One contract could have made you potentially, not that. And remember, that's not even the peak, right? That's just the first wave, right? You could have literally held this all day, and because it came to a low of 78 cents, so you still would have been up $18, even with this massive pullback. And then when it rolled all the way up, look, near the end of the day, you could have gotten almost $3.25. So you could have 5x this. And keep in mind, SPY, you can trade up to 4:15 U.S. Eastern time, right? A lot of people don't know that. They think that at 4 p.m. you have to close it. SPY, you can trade for 15 additional minutes after the market close. But even if you don't ride there, look, you could have gone up to 291. You could have, took it up to 265, another, 265 again. So you have multiple chances to, hold this all day. And it was one contract you would have probably not have sold out right here. You probably would have wrote it pretty close to the top. But anyway, look, so now you see these numbers, right? 62, 89, 150, etc., right? I wanted you all to see this because when you're looking at the charts, it's a lot easier to see like, oh man, I got in here, I definitely would have held it, right? Because you were like, oh, broke 413, it's not coming down. I'm gonna keep holding it. Like, oh, it's at 414. I'm still not breaking it. I'm gonna hold it, hold it, hold it. And this is where you right around here, like right, the 1030 to 1035 mark. Like, oh man, it's a big nasty red candle. Let me see where this is going. You start seeing this. Once it broke 414, you might have gotten out, which still would not been bad, right? You still we go back to that original chart, you would have got out right here. That's why I marked that off. $1.77 from 62 cents. Still pretty much 3x, right? Now, so with all that said, keep that in mind as we look at the Excel file that you saw on your screen that I created, right? And I will go down to the 3 minutes so that you can kind of see what it looks like, on a 3 minute, and you've been like, oh, would I have gotten out, right? So we were saying at 10 o'clock is when you would have gotten in, right? This is at 10 o'clock. Look, you didn't get in here. I didn't get into low, right? We're not even doing the low. We're playing it safe, right? If you would have got in, somewhere around open, you could have gotten in at 48 cents. I mean, it opened at 37 cents, right? 37 cents to $3 and, what is that? 325, almost 1,000%, right? You could have gotten 1,000% on this play if you would have slammed it at open, just rode it all day. But that is not the point. Again, so look at 3 minutes. You could say, maybe, you wouldn't have gotten here, or you're like, oh, I missed the first move, but hey, I see it's coming up and it's pulling back. It's hitting the clouds, not breaking. You could have gotten here. And then you would just put your stop somewhere around here. Never would have come back down. And then you look, it's consolidating above the pivot, holding above the pivot. And then it rejects off the pivot. That's a hammer at a 3 minute, right? You're like, okay, this is good. You would have gotten in here somewhere, or you could have gotten here. Like, hey, that's a rejection. Get in here, etc. Right? Again, not going to talk about all these different things, right? We could say you missed this whole entire move, you missed this whole entire short. You could have gone back in because look, this is overextended right here, right? And we have an inside on a 3. You could take the break on that 413 and roll it up. Anyway, so now that we have this whole idea, a lot of you, this is really the core of this video, and I apologize that it's probably taking a lot longer to get to this point, but I want to give you a lot of context, especially if, you're a new trader, or you're still inconsistent, or you just don't understand my particular trading style or how I present my analytics or my tweets. This gives you a little bit better insight. So thank you for bearing with me. So let's go to the Excel chart that I created. I wanted to show you. I know this is a lot of data, a lot of information, but just bear with me. We'll walk through this, step by step, slowly, and you will see. So what you're gonna see here is it's gonna be 0DT. I'm just using 0DT SPY calls or SPY contracts, right? That's why it says daily 0DT on this side right here, and then these are numbered contracts if you were to get right. And I didn't list anything crazy. I didn't go from 1 to 100, right? I just did kind of what most people are trading, right? We'll start 1 to 5, and then we'll go 10, 15, 20. And I know there's certain people that will slam 50 to 100 and whatnot. So that's cool. And then below is going to be, one contract, 2, 3, 4, 5, up to 10. I didn't do 15, 20. And then I said, this is what, quarterly, semi-annually, and annually, right? If you're new to me, there is approximately 250 trading days in a calendar year. That's why you have this 250. So these are numbered trading days you have, and I broke it down into a quarterly, semi-annually, and an annual basis to show you what we can potentially earn off of one contract, 2, 3, etc., and taking it at different percentage. So let's go back to the top row, right? So number of contracts. This is the cost, right? This is based on, I should just say, let me do this so that we can say it's going to be on 28 April 413 calls, right? So there we go. Now we have that up here. So that just makes it a little bit easier, less confusing if anybody's watching this. So as I showed you on this, right, 62 cents, right? This is what it costs us. Let's just say we got in on that breakout, pullback, and then we got in on that confirmation. The classical way of trading, technical analysis, right? So 62 cents. If you would have got one contract at 62 cents and you took profit at 5%, you made $3. I know, nothing big, nothing crazy, nothing sexy, right? Just, follow along, right? And then at 10%, you would have made $6. 20%, you would have made $20. At 50%, you would have made $31. 70%, you would have made $43. Obviously 100%, you would have made $60. 150%, 93, 200, and so on, right? And you would have made, $620 off of 1,000%, right? So as we go through now, you're like, oh, well, one contract, most people, you guys don't even blink an eye, right? At 62 cents or $62, most of you are slamming more than that, right? We could just jump up to five, right? $300 for a trade. Most of you easily slam more than that. I know that just because of your interaction with me, but let's just say you slam $300 worth of contracts, which on this is within five contracts, right? Now we look, hey man, 5% is $16. 50% of that is 155, 70% is 217, and 100% is 310. Remember this. Remember this chart, right? If you got in here, 100% would have been pretty much, at 120 right here. Most of you, if you got in here, you would have rolled into probably at least this 150, right? So that would have been over 100% already. You would have made $1.50 per contract, right? So, if you would have gotten, five, you would have gotten over that 100%. You would have got somewhere between 100 to 150%. So you would have made like let's just say 350, 360, right? Off five contracts. And you would have been done. And the beautiful thing about this is, look, you would have gotten in at 10 o'clock, and at 10 minutes, you would have made, 300 and something dollars, or 120% off of your play, and you would have been done, right? So now let's just take that example and project it for a longer duration, right? This is what you would have made off. Up here is what you would have made off that single day in one day, right? And this is where a lot of you get, I guess, nearsighted, meaning that all you see is this for that day, and that's all you can fixate yourself on, right? You're like, oh man, I got into a contract, I made 50%, I only made $31, and you're not happy with it. You don't take it, and you let it go back and maybe even to zero, and you don't take it, right? But again, that's why in the nation, I always tell you fixate on this percentage, right? Because look, let's just say you slam 20 contracts. I know 20 contracts might sound a lot, but for $1,240, trust me, most of you are probably playing more than that. Some of you slam $5,000 to $10,000 to $15,000, right? But even if 50%, that's $620. I'm pretty sure a lot of you would be like, man, I take $620 any day, right? That's for one day. So anyway, let's go back to this example. Let's just say we're sticking to the five contracts, and right here, right here's the five contracts, right? Right here. So, in 1 year, this doesn't sound sexy, right? If you were to take five contracts at 62 cents and you took it at 5% profit, you would make $1,000 for within 62 days. In 1 year, you would make almost $4,000. Yeah, I know, not life-changing money for a lot of you, right? You're like, okay, that's nothing, right? Keep in mind, that's if you would have took 5% profit, right? Let's just say you took five contracts and you would have cut it out 20% profit. Now in a year, you would make $15,500. Keep in mind, this is only off a $300 play every single time you trade. And that's assuming you trade once a day. Now, let's say you trade five contracts every single time. Like you trade 3 times a day, and maybe you're winning every single trade because you're cutting at 20%. And that sometimes is not a very big movement, right? Now you can times that by 3. 20% would, for simple math, let's round down to 15.5. We'll say that's 45,000. If people want to get nitpicky, we'll say 46.5, whatever, right? That's the 20%. Now that's for the annual. Let's just say you are taking profits at 50%. Now that's $38,750 off of $300. What if you do it at 100%? 100% is not hard, folks. We literally just showed you. On this. If you would have waited 10 minutes, you would have made over 100%. It would have been like 115, 120%. So with that said, you would have already made this. Every single time you're able to get that, right? If you're able to get 100% every single day, which is not very hard if you wait for the right setup and you play according to a plan. right? And the reason I say 100% is because, you know, look, there's gonna be some days where you might get 50%. There's gonna be some days where you might get 2, 3, 400%. We in the nation, we've done 1,000% days more frequent than people believe, right? So, you know, and that's only off of 5 contracts, right? At 300, like, you know, $62 a piece, right? So that's what a lot of people don't fixate on. I think you all just focus on this and you see, oh man, 5 contracts, I got $155. Right? And I know it doesn't feel good, but keep in mind, realistically, you know, most people are not going to take $300 in one day and turn it into 3,100. It's, you know, can it happen? Yeah, sure. We showed you on the, you know, the option chart that it can happen, right? If you would have held it from literally from 10 o'clock pretty much till you know, close, you would have made, you know, well, you would have made 300%, you would have made 500%, right? Which, you know, here's your 5% on, you know, 5 contracts, $1,550, right? 1,500. So, or $1,550. Apologies about that. So that is what I try to get you all to focus on, right? Not the P&L, but the setup and the percentage. Because the thing is, when you start fixing so much on this number here, most of you are not going to take that profit because you're like, oh man, this is all, you know, you spent little money and you're like, this is not much money. But again, right? I just showed you on that 413 call option chart that within 10 minutes, it passed the 100% mark. But let's say you cut out early, right? Let's say you cut out in the first 5 minute candle, right? You still would have made great money. That's, you know, that's what people don't understand. You still would have made great money. Let's just go this. You would have gotten here, you know, and you could have got at, you know, 80, a little bit like 90 something cents. And if you didn't, you know, the second, you know, 5 minute candle, let's say you just cut out somewhere in the middle of this, right? You could have cut out $1 or something. You still would have made 40, you know, 50, you know, over 50%, 40 cents, you know? So that's what I'm trying to get you all to focus on is that don't focus on the dollar, focus on the setup, focus on the percentage, right? And this is only using a very inexpensive option contract. You know, you can see that as you increase your size or the dollar value, you increase the number of your profit, right? And that's why I have a saying in the nation. I said $100 a day will get you $25,000 a year. A lot of people don't focus on that. They focus on the daily gain, but they don't focus on this bigger picture, right? You know, look, like I said, at 70%, if you're taking 70% collective profit overall, you know, on all your trades for an entire year, you know, off of $300, you would make 54 right here, $54,250, right? I know a lot of you would take that, you know, especially for what, 10, 15, 20, 30 minutes worth of work, maybe an hour tops, right? In the nation, we're usually done before 11 a.m., right? I tell you my game plan, I show you what's going on, and we get it right at least 80% of the time. You can go back and check my tweets. Those of you that have been here long enough, you know I nail it every single time for you. But the point is this, focus not so much on the dollar, right? And not so much on the now. Focus the big picture, right? I think a lot of you are not seeing all this down here. All you see is, you don't even see all this. You literally just see this. You're like, oh man, 12, 31, 43, $62 off 100%. Whoop-de-doo. You're like, I made 100% off of one contract and it's $62. I know a lot of you don't feel good about this. So you're like, ugh, $62. Well, what are you expecting? Are you expecting $62 to turn into $10,000? I mean, look, even if you get 1,000%, it's 620. Even then, I guarantee you, some of you won't feel good. What you will be doing is you're gonna be sitting there cursing yourself, man, I should have gotten more contracts. I wish I would have done 10. Because if I would have done 10, it would have been 6,200. But you didn't. But that's not the point. The point is you just made $1,000 or 1,000% play. Right? That's the mindset you are all in. You just want to focus on this because you know what? Unfortunately, there's a lot of popular fin Twitters out there that you follow that give you that disillusion. What they show you is, oh, look at this. I made a $15,000 gain. What you don't see is how much money they spend. Right? I can guarantee you they're not spending, you know, $300 and making $1,500 or $15,000 in one day. I can almost be certain, 99.9% certain that that is not happening. You know, sorry to tell you the truth, but that is just the reality. And let's just change this number, right? Let's just change it to a whole number, make it easy, right? We'll do my infamous, $100 a day. $100 a day, right? Here's your $100 a day, right? 5% off one contract is $5. And, you guys are all smart. And girls, everybody in here is smart. They know how to do simple math, right? Simple multiplication, things that we learned in elementary school, right? Here's your $100 a day. $100 a day, in 1 year, $25,000, right? That's my famous saying. And now look, if we take, 5 contracts, it gets you $125K. You 10 contract, it gets you $250,000. So that is what I'm trying to say. And look, if you would have spent $100, let's just say those contracts were $100. Let's just go back to this real quick. Let's just say this was $100, right? We already told you that this thing within 10 minutes ran, from 62 cents to, 150, right? 62 times 2 is 124. So this is a little bit more than that, right? Times by 3 is 186. So we were short by 30 something dollars. So, 120, 130, 140%. So let's just say this was 100. Well, then this right here would have been, over, probably like 280, 280 to something like that, right? So in correlation to this, one contract would have gone you somewhere between $100 and $150, right? Not bad for 10 minutes work, right? That is what I want you all fixed on, because you guys and girls can't get past this. You can't get past the daily. And that is what is hindering you. Once you can see past this, you will start to see things a lot differently. You'll start to take profit, and it's okay. Look, what happened? Look, even if you take profit at 40%, $40 is real money, right? $40. I mean, look, let's just say $40, right? Let's just say you do that for 62 days, right? 24,000 in 1 year, it's 10,000, right? Not bad. I think a lot of you would be very happy with $10,000 a year, right? For 10 minutes worth of work, maybe 1 hours tops, right? So it's not bad, and that's off one contract, right? Let's just say you drop 5 contracts. You're a big whale, a big spender. In 1 year you will make $50,000 off of 5 contracts, right? So it's this I want you all to fix on. Longer picture, bigger picture. And this goes along with a tweet I sent out earlier today in the market. I said, look, today, whatever trade you get in for that day is going to be your trade. Meaning that don't focus on, let's say, oh man, I lost $100,000. Well, don't focus on that. Focus on the fact that you got into trade and you made a good trade. Take it. Even if it's like, $200, $300, $400, right? Slowly chip away at that. As you can see, if you were to drop, $500, right here, this line, we'll just go across and we'll just highlight it so you can see that. $500 right here. Let's just make it bright yellow so you all can see that. So it's easy, right? $500. Right? And let's just say overall course of 1 year, you're able to net 50% on that, right? And you drop 5 contracts. You just made $62,500, right? You had a $100,000 loss. Essentially now you're down to pretty much, 37.5, right? We can check the mental math. 37.5. Don't test me. Math is good. Math is strong with the force, with the one, with the SAD nation. Anyway, look. So after 1 year, you just cut your loss by 50%, actually more than that. You cut it by like 62.5%. So that's the beauty of it. And then next year, you do the same thing. Like you're like, hey man, $500 a day is very minimal risk. I can handle that. And then you're like, oh, now year 2, I made 62,000. Now you're like, okay, this, now you're positive 25,000 year 2. And year 3, you keep going on, right? We're not looking for anything crazy. We're not saying over the course of 1 year, you're going to make 100% return, right? 50% is very reasonable, right? There's going to be days where you get 20%. Days you get 100%, days you get 1,000%, days you get 5%. So, I think 50% is very reasonable. So as you can see, year 2, you already made your money back and then some. Year 3, you keep adding on, and we can go on, right? After you're positive in year 3, 4, 5, 6, right? Let's say you do this for 10 years, right? I mean, I don't do the math. 10 times 62,000 is 620,000, over $500,000. And the reality is most of you will probably start sizing up more than $500 after 2, 3, 4, 5 years of being consistent, being disciplined, sticking to the rules. And by year 5, you have so much experience under your belt in terms of trading, managing risk, and the most important part, the mental aspect of it. I can assure you, many people that have been trading for, like myself, over a decade, were spending more than $500 per trade. The reality is, a lot of us are spending, in the 4 to 5 figures per trade. I'll leave it at that, right? And you can do the math yourself and how that turns out. Some of you that have been following me, I've been posting my gains recently, just, and I have multiple accounts, but, the reality is I'm just showing you what you can do with minimal stress, right? Let's just say, you make $1,000, 10 contracts, $1,000, a day, right? What does that turn into? $250,000, right? I think when I say there's $250,000 you can earn in a year for 1 hour's worth of work, a lot of you find that a lot more enticing than when all you see is, you just see this $1,000 gain and you're like, oh, that's not that much. Like $1,000, that's nothing. Because a lot of you are seeing people post, 10, 20, 30, 40,000. But anyway, look, something like this I've already posted on my Twitter. The thing is, a lot of you, if you subscribe to my Twitter, if you go to my pinned tweets, right here, pinned tweet number 14, and I say, here's a preview of how much you could potentially earn in 1 year off of trading one SPY contract. All right, I gave you different scenarios in this one, like out of the money, in the money, at the money, and these are 0 DTs, and I gave you this wonderful chart similar to this, right? Very similar to what I showed you today, but what I reproduced was a recap of April 28th, 2023, 413 0 TD calls based on the index that we provide and how it played out. So you can, check this out if you want to see it in my pinned tweets, right? There's a lot of good information in there. I say take your time and really go through it, right? It's not just, mental. There's a lot of strategic, a lot of educational things in there as well for you, right? We're talking about futures. I mean, I can guarantee you a lot of you probably didn't even know what makes up SPY and QQQ, right? I created this for you, right? QQQ, SPY. This is why I talk about the quad, right? Apple, Microsoft, Amazon, Google. This is the quad. Look at QQQ. Look how heavy weighted Apple is. Over 10%, right? So if Apple was rocketing and SPY's going down, well, this is get prevented from totally free falling. Or if SPY's going up and Apple's, or not SPY, but QQQ's going up and Apple's going up, well, that just compounds. Look at this. Between Apple and Microsoft, they're weighted 23% of it. So if these two are having a phenomenal day, that means QQ is rocketing. So again, a lot of this is in my pinned tweets, and you guys can see. I mean, like I said, I have up to 20 something, and I'm continuing to add on and add on and add on and add on and whatnot. So again, I may post this if I have it saved. So if anybody's interested, let me know, and we will talk about it. But anyway, look, thank you. I know this is a long video, but I can assure you, if you sit through it and you listen to it, you will find a lot of useful things in it, and hopefully something will click for you. Again, like, subscribe, turn on notifications, subscribe to the Twitter as well, because that's where I post all my analytics, or most of my analytics, along with live market updates. So with that, thank you again, and I'll talk to you later. Bye.